All right, so this video will be an explanation on the watch list and chill. That way I don't have to constantly like go over those things in the actual video. So that way I can make those actual watch list and chill videos shorter. And then that way this can be a video that people can use to always reference. All right, I don't know what he means. Let me find out what he means. So first things first, like the video. All right, subscribe if you aren't subscribed, turn on notification bell, all that YouTuber stuff, right? Also, text 313-251-7291. All right, for watch list and chill post up alerts, basically. So whenever I post, I'll just send out a text with the video, as well as whenever I go live on Instagram. Sometimes I do pre-market Zooms, still like going over the idea of that in like a Saturday Zoom, as well as like random Zooms like during the trading day, especially when things like get slow. That way I can show you an example or go over a trade or things of that nature. All right. So that's that. Take that over here. Exit out. So primarily, one of the things that needs to be understood is what do I actually use to make what strategy am I using? I'm using the strat. All right. So if you don't know what the strat is a system that was created by Rob Smith. All right. Rob Smith is the creator of the strat. His YouTube channel, I believe, is like Rob Smith in the Black. All right. Let me pull up his Instagram. I mean, not Instagram, Twitter. All right. So this is Rob's Twitter. All right. Follow Rob. Rob is the creator of the strat. All right. If you need the strat cheat sheet with the examples of what a 212 is, a 312, a 13, all that stuff, go to Sarah's Twitter. All right, Trade Sniper Sarah. Click on the strat resources guide. All right. Or if you're in the Discord that I'm in, you will be able to, I put like the strat cheat sheet in there. I don't think I put the newest one in there, but Sarah updated the strat cheat sheet. And so the strat cheat sheet now looks like this. They took the colors off because it was confusing people. All right. So you got the PMG, the 122. So now you can know what that is. All right. So whenever I'm looking for trades, I took the numbers off my chart, right? I took the numbers off my chart. So whenever I'm setting up my trades, it's some type of strat pattern on some time frame. All right. So let me go over Cat. Cat was on the watch list and chill for 414. All right. So it was on the list for 414. So let me walk you through what things mean. So first and foremost, what you're going to notice is my candle colors, right? I have my inside candles painted yellow. I have my outside candles painted blue. All right. It's not too many colors you can choose from that's good on your eyes in Thinkorswim, as far as the ones I know to type in the script, right? So my inside colors are yellow. My outside colors are blue. Now, the difference between the bearish and the bullish, if you haven't been able to pick up on it, is the green candles are unfilled. The red candles are filled. So if the blue candle is filled, that means it's a red candle. All right. That means the close is lower than the open. So price open here, the close is here. For a yellow candle, price open here, the close is there. All right. For an unfilled, right? Filled, open, close. All right. So that's how you can tell the difference between bullish, bearish. All right. So for me, I didn't need the numbers on my chart. I understand what the strat is. If you don't know what the strat fully want to know, if you fully don't know and you need to know, watch the intro to the strat on my channel. Also go check out Sarah's videos. All right. So whenever I'm doing the watch list and chill, it's based off of the strat pattern, either on the 4 hour, the daily, the weekly. So for example, we have a 4 hour entry right here. I don't think I marked the put entries. I might have at the when I originally dropped the watch list and chill, but at the same time I said that I wasn't gonna take the puts on that video. All right. But this would have been the entry for puts. So normally when you see my watch list and chill, this is what you will see. You'll see an entry for puts on the daily. Uh you'll see like an entry for puts on the 4 hour. If there's a 4 hour entry, there wasn't a 4 hour entry on here. So what I'll do is whenever I'm marking up my chart, I go to the 4 hour, I go to the daily, I go to the weekly. A lot of times I also either already know what the month, quarter, and year is doing, because a lot of times whenever I'm charting these out, I've been sticking to like a certain amount of tickers, just because of so far this year, which sectors have been hot or which sectors have been, falling, you know what I'm saying, as far as like playing puts and things of that nature. So the weekend list, let me say this, the difference between the weekend list and the weekly list. All right. The list that comes out Saturday, Sunday, that's usually like the list where you can actually like swing trade things, right? Because I'm looking at the weekly setup. I am marking the daily and 4 hour, but I'm looking at the weekly setup and like, all right, this could, potentially could hold this the whole week, or hold this for a couple weeks, or hold this for a month. You'll know that by the expiration. If I'm giving a month out expiration, that means this could potentially be something that you can hold for a couple weeks or whatnot. Because whenever we're doing it and we're like, all right, this is the price target right here, you don't know when it's going to hit the price target. So it's better to do it with time instead of saying, all right, I'm just going to buy a 2 week out expiration. If I can buy the monthly contract, I'm going to buy the monthly contract. With options, the monthly contract, which is the third Friday of the month. All right, we just had the monthly contract expire. It was expired on Thursday because Friday the market was closed. But the third Friday of the month is always going to be the monthly contract. So May 20th is the monthly contract. June 17th is the monthly contract. But getting back on topic, let me go back through this. When I'm doing the weekend list, that's the swing list. The one that comes out during the week, like once we've already had a trading day, those are more so like day trades, but they also could be swings, especially if it's some of the same ones from the list I gave out, Sunday, or if I put the video out early Saturday. All right. Now, what's gonna tell you whether or not it's truly a swing is one, how it closes. All right. So you need to know enforce and not enforce, which I will go over that here later in the video, right? It being enforced, not enforced. Also, how much are you up on the play? I personally feel more comfortable swinging something I have time on the contract, as well as if I'm already up 30, 40, 50, 100%. Just because if we gap in a direction against me, I'm not completely obliterated. I'm still either up or I'm at break even. All right. So that's the differences in the list. Now, let me like methodically work through the watch list and chill and what it means. So again, you'll see like an entry for 4 hour, entry for on the daily. This technically would normally say entry for calls on a week. I'm gonna, ask a question. Would y'all prefer? No, I'm just gonna keep saying entry for calls on the week. This one I didn't do it. Normally this wouldn't be PT1 for calls on daily. Normally this would be entry for calls on a week. And I'm gonna have another example I'm gonna flip to after this. I'm gonna flip it to X. All right. So what I'm doing is the difference between the 4 hour entry, the daily entry, and technically this would be the weekly entry. All right. The difference is the 4 hour entry is the earlier entry. The 4 hour entry is where I prefer to get in at. Why? Because what you pay for the option at 218.34 is going to be cheaper than what you pay for that option call at 219.68. That's the difference. All right. That is the difference. From here to here, especially on what was basically Lotto Thursday, was probably 100%, even though we gapped up. All right. We gapped up, came back, and then went back up. Right. Even though we did that, if we had cleanly broke this entry, right, and then went to there on Thursday, Friday, that can be 100% play right there. That can be depending on the stock, depending on what contract you pick, right? That could be 100%. So the 4 hour entry is the one I'm actually getting in on, right? That's why I have, if there is a 4 hour entry, I have it marked. We don't have a 4 hour entry for puts. Why? Because if we zoom in a little bit closer, right? This is Wednesday, right? This 4 hour candle, this last 4 hour candle is the low of the day. That's why it's entry for puts on the day. If that higher time frame has the same entry as that lower time frame, I'm going to give it to the higher time frame, because the higher the time frame, the stronger the trend, the more significance, right? So I'm going to give it to the higher time frame. That's Wednesday, whenever I did this, was the only time I've ever said PT1 for calls on the daily, 2 rev week. Normally, this is what it says. Entry calls week. That's normally what it says. So let me flip it to what it actually normally would be. Entry for calls on the week. That's normally what it would say. All right. That's normally what it would say. And I'm not going to do it the way I had it before ever again. Because let me tell you the reasoning. All right. The reason why it says entry for calls on the day is because it's a question that I always used to get. Can I still get in? Is it too late? When I'm like, well, if you missed a 4 hour entry, if that stock really wants to continue to go, once it crosses the daily, that might be a good entry once it triggers the day. Or sometimes what happens is we'll get the daily trigger, right? It'll trigger the day and we get a pullback, corrective activity, or as Rob will call it, a TTO. And all a TTO is corrective activity. It's just when the stock pulls back a little bit before going back in that same direction, because price doesn't go straight up and it doesn't go straight down. All right. So again, the difference between the entry for calls on the 4 hour and the entry on the daily, the entry for 4 hour, if there is an entry, that's the entry I'm getting in on. Why? Because what I pay here is different than when I pay here. All right. Let's say my stop loss is 20%. Let's say I'm not doing it where you mark the candle, because on a lot of Friday, I'm not really marking the low of a candle. You could easily go from, depending on how far away that candle is, that could be 50, 60% on a 0 day lottery expiration, right? Because that's why we call it Lotto Thursday, Lotto Friday, is if it expires that day, which again, this time, because Friday the market was closed, contracts expired Thursday, right? So we called it Lotto Thursday. That can be a big difference. So a lot of times I'm doing like 20% usually. All right. And again, it depends on your expiration. If you went 2 or 3 weeks out, then you probably could be like, I just marked the bottom of the candle instead of saying 20% or whatnot. All right. Dang, I lost my train of thought. But ultimately, what I'm trying to say is basically, when I get in on this 4 hour entry, the next entry that you could potentially take, right, is the daily. If you missed it on the 4 hour, you could say, well, let me see if we get a directional day, because that's what the entry for calls on the daily means. That means we just went 2 up. If we break the entry for calls on daily, that means we're a 2-2 to, we're basically a 2 up. I was about to say a 2-2. It depends on the strat pattern on the daily. That means we're a 2 up on the daily. All right, that's a directional candle, 2 up. Remember with the strat, price action moves in the direction of the most twos, right? So when we cross the entry for calls on the daily, that's a potential entry if you missed the 4 hour entry, right? But if you're already in on the 4 hour candle, that lets you know when we have a directional day, which means our price is moving further in my favor, right? Because if I got calls and we don't trigger the day and we start to reverse and we come back to our entry, it may go all the way to the other side. All right. So again, the difference in the entries is, one, I'm entering on the 4 hour, right? If there is a 4 hour entry, once it crosses the daily, that lets me know we're directional on the day. All right. Because if we're not directional on the day, we're an inside candle. All right. If we didn't, if we didn't go 2 down or 2 up, that means we're an inside candle. That's a consolidation. It gets real choppy up in there. All right. So now the entry, the difference between the entry for calls on the daily and the entry for calls on the week at this point, if you're already in again, now if we trigger the week and now we're directional on the week, prices further moving in our favor. That lets us know we're directional on the week. All right. Knowing these things can help you be at more ease holding, continuing to hold, or whatnot. If you see it trigger the week and then really starts to come down, you might have to, all right, this might be all it had. All right. This might be all it had. Let me see. All right. Let me see if we go back in force. All right. And I'll show what in force is. So that's the difference between the entries. All right. What you pay here is going to be different than what you pay here, than what you pay here. All right. From the 4 hour entry to the week entry, that could be 200, 300%. This cat play went 1,000%. If you, depending on what contract you bought, especially if you bought the 225 whenever it was down here. All right. Definitely 1,000%. All right. Cat moved on average, it moves $5.30. It literally doubled what it normally moves. All right. So this was a great trade. So that's the difference between the entry for calls on the 4 hour, the entry for calls on daily, and vice versa for the put side, right? The 4 hour entry is the earlier entry. On the 4 hour, we have a strat pattern. This was a 2 down, 2 up reversal. All right. This right here, this candle right here is a 2 down. All right. That's a 2 down. The next candle went 2 up. That's a 2-2 reversal. The first target is the entry for calls on the daily. And that's the other thing, the entry for calls on daily, sir. If the 4-hour once triggered hits price target, which is the daily entry, right? That would basically hits price target, hits magnitude. That lets you know we have a directional day. So again, that's the purpose that the entry for calls on daily serves. And I got to say it multiple times because sometimes people skim through the video or they don't fully pay attention. So on the strat pattern on the 4-hour, we're looking, all right, if we get the 2-2 reversal, right? If we break the entry for calls on the 4-hour, if it hits price target, we get the directional day, which leads to the 2-2 continuation on the daily. All right, because that's what the daily candle was, a 2 up. All right. Now I can actually do what a failed 2 is right here. This candle right here is a failed 2 down. Why? It's not enforced, right? A failed 2, not enforced, basically like the same thing, right? What does enforced mean? Enforced is when if we break this low, right? That's a 2 down. Price action has to stay below it, below 216.80 for it to be a 2 down enforced. Why is that important? When things aren't enforced, that's how one you get a 3 candle, right? This 3, because you can see it opened here, so it gapped down. It closed here, opened here. That was a gap, right? Once we broke above 215.75, we're not a 2 down in force. Price action starts to go back through this previous range. We go 3. That's why being in force matters. If we're not in force, that's when price action can really start to reverse against you. That's how a trade starts to become a losing trade, when it's not in force. That's why a lot of times when we trigger the 4-hour, we trigger the daily, and we get that directional candle, if we pull back, it's like, all right, how far are we getting away from this entry? And I would prefer to go back in there. I would prefer to go back above that point or below it if you're in puts, right? So being in force matters because, again, if you bought puts and it's not in force, you're like, what's wrong with this trade? Oh my gosh, it's going against me. It's not in force. It's not a 2 down in force on the 4-hour. You might want to go ahead and cut that trade, especially if it breaks past your entry. Go ahead and cut it. All right, go ahead and cut it. Take a re-entry, take another entry, or move on to the next stock, right? It's better if you hold things that are in force on the 4-hour, on the daily, on the hourly, because if it's not in force, it can really get ugly. It can start to reverse against you. All right. That's how you start to get those ugly, nasty down 30%, down 40%, down 50%. Just are you in force? If you're not we want time frame continuity. Whenever you watch the strat videos, we talk about time frame continuity. But the other aspect of time frame continuity is having a directional candle. That directional candle being in force. All right. Now, going to the daily. So that was, in force. So that should tell you the importance of it. All right. Now, let me show you something. Let me delete this right here. Remove. So whenever I was talking about the weekly candle, right? And I was saying the difference between the entry for calls on the 4-hour daily, weekly, right? You always want to pay attention to your higher time frames. I don't care if it is a day trade, because you knowing that we're about to get the 2-2 reversal on the week could have let you know this trade could really get explosive. If you don't go look at the weekly, you might be like, oh, I'm gonna take profit. I take my 50, 100%. But if you know that, all right, we're so close to triggering the week. We trigger the week at this point in the game, we might really just go crazy. You trigger the week on a like towards the end of the week, you got to think about it like this. Price now on Thursday and Friday, this is the back end of the week. It's setting next week up. So Wednesday, Thursday, Friday, it's starting to set up the next week. All right. Just like, the reason why the hour flip and the 30-minute flip means so much is one, because the difference in time frame, the continuity change, but also the fact that on that 30-minute flip, that's technically the back half of that hour candle, because first you get the hour flip, you get a new hour candle, and you get a new 30-minute candle, right? And then on the back half, and I'll show y'all this real quick, because I'm kind of like nerding out, right? But for instance, right, the hour flip happens on the the hour flip happens on the bottom of the hour, if I'm not mistaken, 1:30 2:30, 3:30. That's the bottom of the hour. The top of the hour is 12, 1, blah, 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 right? So like right here, this 30-minute candle is the back half of this hour candle. These two right here make up 1 hour, right? 8:30 started the hour candle. This is the back half of it. All right. Same these two. This is the first 30-minute candle, right? When you get the hour flip, you get a new hour candle, a new 30-minute candle, a new 15-minute candle, right? On that 30-minute flip, that's the back half of that hour. It's going to start to set up that, you know what I'm saying, that next hour. Just like right here, the first hour, the first 30 minutes of the hour, if I mark it right here on this hour flip, right? 10:30. That's the first 30 minutes of that hour, right? And as you can see, price pulled back a little bit. Price pulls back. Then, because again, we're on this 10:30 candle, right? Then the next 30 minutes, on that 30-minute flip, the back half of that time frame, we go up. As you can see, and it sets up the next hour, right? Then we got the hour flip, we went up, we started to pull back. That 30-minute candle starts to drop, right? And then if we go to the 15-minute candle, the 15-minute time frame, you can see the back half of that 15 of that 30 minutes, right? Because these two candles make up a 30-minute candle. That back half of that 30-minute candle, this last 15-minute candle, sets up one this 2-2 reversal on the 15-minute that ends up setting up that hour going into that next hour and us going up some more. All right. So if you take that concept and you apply it to the daily, right, the back half of the week, then you apply it to the weekly on the back half of the month, you'll start to see these setups, right? All right. So we're starting to get on the back half of the month. We got 2 weeks left in this month. Cat just set up the next 2 weeks to potentially go and make a new all-time high. But anyways, getting back to it, right? Going back here. And I know this might be a little bit sporadic or whatnot, but it's just like it's so many gems that I could give. But if you don't go out and you don't look at the weekly chart and know where your entry for calls is on the week, and knowing that that would be like a 2-2 reversal on the week, you won't know that this trade can go even further. This trade can go even further, even farther. It can really get parabolic, right? That's why I have the entry for calls on the 4 hour, because I could just go PT1, PT2, PT3, mark a bunch of price targets on the 4 hour, right? And then not say this is when we get directional on the day, and not know that, all right, we just hit this price target and now we're reversing down. Oh, snap, let me take profit right here, or not take profit. And you trying to hold to the next price target, not knowing that we triggered the day. We were directional on the day. Now we're pulling back heavy. You might want to get out that trade. We're no longer in force, right? And then knowing where we are on the week. If I have the entry for calls marked on the week and I have the entry for puts and we're in the middle of the week, right? We're in the middle of that previous candle's range. I'm not going to know when we're getting closer and closer to one triggering the week. And I'm not going to realize that, oh, snap, price is really going up. Because sometimes when you're in the day and you're looking at the chart, you don't realize how far you've moved. Because a lot of times people are looking at P&L. And if it's just the beginning of the week, you might only be up 15%, 20%, depending on how far out your contract is. Where did you pick an in the money contract? A lot of this also comes down to what contract you go with. But sometimes it doesn't register, right? Sometimes we zone out and we forget, oh, snap, we're about to trigger the week if you don't have that mark. So that's why I always just say entry for calls on the 4 hour, entry for calls on the day, entry for calls on the week. Because for me, it lets me know where we are. When price starts to pull back, oh, snap, how far are we to, untriggering the day? How far are we from basically how far are we from potentially not being enforced anymore on the daily? If we broke above the daily entry and price starts to pull back, I need to know where we would not be enforced on the daily at. I would need to know where we are not enforced on the week at. And that's why I keep up with those things. Plus, the other aspect is if we trigger the week, right? And I say entry for calls on the week, that means, all right, now if we stay enforced on the week, you can feel more comfortable holding that further out contract. All right. Because if the week is enforced, all right, cool. The chance of us continuing the next week, if we close in force, It's high. All right. It's high, but can price reverse? Yeah, because like even right here, this week technically closed in force, but at the same time, you can see that it gaps down. But it closed in force, right? But we end up going two down the next week and then two down again. And this is where we didn't close in force. And then, we end up going back up. So sometimes that's just knowing, bearish candles, bullish and bearish candlesticks, how bullish does a candlestick look and all that other stuff, as well as marking those entries. Because if you mark the high and low, and that's why I always mark the high and low, no matter what time frame continuity says, because at some point there's going to be a pullback. You don't know when the pullback is coming. You don't know when price will go two down before going back up, right? And that's why I always mark it so I know where that's at. So I know, oh man, we getting close. I might want to just go ahead and close everything out. All right. Need to know those things. As you can see, this is the example of corrective activity at TTO. We don't take out this low and then we get the reversal back to the upside. Price ran up, cooled off for a little bit, then we get the reversal back up to the continuity. Rob calls it a TTO. Sarah calls it corrective activity. All right. So that's the watch list and chill essentially, right? And then PT1, all that means is price target one. All right. Price target. PT means price target. PT1 calls on the week. PT2. The reason why I mark so many PTs is one, I want to know what's the next price target. How far are we from it? Right. If I just mark one and take profit here, I potentially could have held. I might have left money on the table. So that's why you see all the price target marked, as well as a lot of people message me and be like, what's the next price target? What's the next price target? So I mark those price targets for people. But as far as determining my price targets with the strat, we mark the high and low of the candles, not the body, the high and low. All right. The high and low. Wicks matter in the strat. All right. Because on the lower time frame, price was there. So it might be a wick on the weekly, but we go down to the daily. Oops. And you see where price is at, right? This week right here, we go down to the 5 minute, we can see candles, right? Price was there at some point. So ultimately, I don't even need to go to the other chart. Ultimately, that's the watch list and chill. All right. That's ultimately what the 4 hour for calls is. What's the difference? All right. 4 hours the earlier entry. All right. That 4 hour strat pattern, if it hits price target, that's going to trigger the daily, right? Because I'm lining up multiple time frames. With the strat, I use multi-time frame analysis. When I'm marking my entries for plays, I mark them on the 4 hour, the daily, the weekly, the monthly, the quarter, the yearly. I just didn't mark the monthly for cat. I'm sure we triggered something on the month. As you can see, we triggered the 2-2 continuation on the month when we broke above PT2 for calls on the week. All right. So when we broke above it, now we're two up on the month and we're in force. How are we in force? The previous month's high was 227.05, right? We close right now. We're at 227.81. That's in force, right? As long as we're in force, we potentially may continue up. All right. That's more bullish. And if we're in force to the downside, that's more bearish. All right. That's saying that, all right, the mindset that you should have is if price right now is higher than yesterday, that's bullish. If price is higher than last week, that's bullish. If price is higher than last month, that's bullish. If price is higher than last quarter, that's bullish. That's why we're analyzing all these different time frames, because we're saying, oh, the day traders are saying this is a buy. The weekly traders are saying it's a buy. The swing monthly traders are saying it's a buy. The quarterly investors are saying it's a buy. The yearly investors are saying it's a buy. Prices continue to go up. If price is higher this year than last year, that's bullish. If price is lower, then well, basically, if price this year is higher than price ever was last year, that's bullish. If price is lower than last year's low, that's bearish. If we're lower now than we ever were last year, that's bearish. That's a whole year of data. We're lower than last year. Wow. You know what I'm saying? That's like the mentality. That should be the light bulb that goes off in your head. Hopefully this was like a really good explanation. It's kind of long, but I'm trying to give you like the mentality, how I'm thinking, all these different things, as well as some strat gems. That way you can continue to take it like, okay, so this is what happens. And like whenever something gaps past your entry, I know that's asked a lot. just wait for a reversal back up. So like this 312, you could have took this 312 right here, and then you're like, oh, we're close to triggering the week. Oh, let me see what's about to happen here, right? Um, so you could have took that, or you could have went to an even lower time frame. You could have went to like the 2 minute or something like that, and you could have took this 212 continuation. Now, normally strategists say don't take continuations, but inside candle continuations are different. All right. Plus, it's a Momo hammer. All right. How is it a Momo hammer? You can see that the candlestick is a hammer. A Momo. The difference between a Momo hammer and a regular hammer is a Momo hammer happens in the uptrend. A hammer happens at the end of a downtrend. So you have a nice Momo hammer right here on the 2 minute. You could have took this 212 continuation, right? This could have been time because you're on such a low time frame. This was a small candle. This is where you could have been like, my stop loss is right here. Instead of when it broke back below your entry, you could have said your stop loss is right here, and then you would have been set. All right. So that's one time, like if you're on that short of a time frame and it's a small candle, instead of entering here and saying your stop loss is all the way down here, that's a wide candle. All right. Um, but yeah, so if it gaps past your entry, wait for a reversal back into the upside or to the downside. And also, again, being enforced. This was a 212 continuation off of being two up in force on the daily. All right. So you got to take that into account. Yeah, this pullback happened, but we're still in force. We didn't break back below the being a two up on the daily. All right. So that's why I'm saying what I'm saying. And all of this should make sense. All right. So ultimately, that's everything. I'm If it's a D, that means the daily. WK means week. M would mean month. All right. If I say QTR, that means quarter. All right. Those are the differences. All right. So I'm gonna let you know the time frame. This is PT1 calls on the week. Why does the time frame matter? Because the higher the time frame price target, that's when you might see price hit it and then pull back hard. Like sometimes we'll trigger the quarter, we'll hit a price target on the quarter, or break last quarter, and then we'll pull back and then go re-trigger it. All right, that's why it's important, because if you're hitting something on the quarter and you see a hard pullback, all right, you might have to take some profit, close some of the position, or depending on how far it pulls back, or if you had entered recently going into that, you might have to just go ahead and cut that position, because sometimes it's also where your entry is at. If you entered, let's just say, for example, all the way down here, and let's say, just hypothetically speaking, if you entered down here, right? And let's just say the quarterly trigger was right here. This pullback that happened, you good, versus somebody who entered right here and then this pullback happens. That's way past your entry for one. All right. So all those things come into factor, because I know some people are coming from different strategies where you just hold, you be down 60%, and then and you slowly come back into profit, and people say diamond hands and all that extra stuff. You want a diamond hand a winner that continues to go, not diamond hand something down 70-80%. All right. So entries matter, but also knowing, again, just the simple stuff, putting the basics in force on the 4 hour, in force on the daily, in force on the weekly, a two up, a two down, right? All those different things. All right. So that's ultimately the explanation of the watch list and chill. And I'm out. Spread love, spread positivity. Peace.